Good afternoon. Rain or shine, getting right down to business here. We are doing it live and doing more at 4 weekday afternoons, right after Guy Benson, now at 3 o'clock on 790 KABC. And just before the 790 KABC News Blitz with my buddy Randy Wang at 5. Mottek On Money. We are live on the air, 790 KABC, streaming live online worldwide at KABC.com. And your on-demand Mottek On Money podcast, KABC.com, Apple iTunes. Check us out on YouTube and all your favorite podcast platforms. Winning day for the stock market. We do have a winner here. The major averages ended sharply higher today after a one-month exemption from tariffs for automakers, increasing hopes that trade tensions can ease at some point. The government debt, meanwhile, sold off, sending the 10-year note yield up by the most in a couple of weeks to 4.26%, sending fixed-rate mortgage rates up from 4-month lows. The Dow coming in for a closing gain today of 486 points. The S&P 500 up 64, and the NASDAQ gained 268. It was the first winning day of this week and the first winning day in the month of March, coming off a nasty losing streak, including the past 2 trading days in which the Dow had given back more than 1,300 points. Both the S&P 500 and NASDAQ today bouncing off the lowest finish since November 4th, which was the day before President Trump won the presidential election. President Trump proclaiming America is back in his first speech to Congress since returning to office and announcing his big accomplishments. The golden age of America has only just begun, he told the joint session of Congress. He doubled down on tariffs, called to end the war in Ukraine, and praised Elon Musk's cost-cutting agenda and urged Congress to approve more funding for his deportation campaign and undo the CHIPS Act. Among other things, shares of automakers Ford, GM, and Stellantis were at or near session highs today after the White House said it would give a one-month exemption to tariffs on automobiles coming in from Canada and Mexico. Shares of exchange-traded funds that invest in Canadian and Mexican stocks, meanwhile, were mostly higher today despite tariffs on U.S. imports from those countries that kicked in on Tuesday. As I mentioned, benchmark Treasury note yields moved up on hopes for tariff relief. The yield on the 10-year note ticked up to 4.28%. The Federal Reserve's so-called Beige Book report, that's the report of economic conditions across the country and across the Fed's 12 districts, showed that economic activity across the U.S. rose slightly, while inflation worries remain. 8 districts reported flat or slightly negative growth in the month of February. 6 districts reported no change in economic activity, while 2 saw slight contractions. The remaining 4 saw only modest or moderate growth, and business contacts reported widespread nervousness about tariffs in the construction and manufacturing sectors. Businesses created just 77,000 new jobs in February, according to the ADP payroll survey coming out today. This ahead of the big enchilada of monthly economic reports we'll be getting on Friday. That's the monthly jobs report from the Labor Department. The increase today was the smallest since last summer. This is private hiring, 77,000 new jobs in February. Economists polled by the Wall Street Journal had expected a gain of 148,000 new jobs in the ADP survey. House Ways and Means Committee Chairman Jason Smith warning that the U.S. could hit its statutory debt limit come May. In comments to the American Enterprise Institute in Washington today, watching what's happening with the recessionary fears kicking in now. The Atlanta Fed GDP Now model projects the GDP for the first quarter of this year at negative 2.8%, down from 1.6 estimated earlier this week. The price of gold remains firm above $2,900 an ounce here. We will discuss what's happening here with the reaction in the markets, including gold, the economy, market reactions to the tariffs back and forth, and the whole works coming up later this hour with economist, currency expert, gold expert AXEL MERK, the president and chief investment officer, portfolio manager at MERK Investments, which includes the VanEck MERK Gold ETF OUNZ. The latest storm here in Southern California today adding to the misery of the homeless on the streets of Los Angeles. The Union Rescue Mission in downtown L.A. is a beacon of hope on Skid Row with the number of homeless men, women, children, and seniors at or near all-time highs. And now after the devastating firestorms in L.A., it appears the situation is only getting worse, with thousands of homes and businesses destroyed. I'll be joined later this hour by Mark Hood, the CEO of the Union Rescue Mission, and the host of the Just Help One radio show and podcast, heard every Thursday night at 6 p.m. right here on 790 KABC. But first, on your money, the markets, the economy, and the whole works now. Let's bring in Gabriel Wisdom, Managing Director of American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, you're one of us. Hope you're staying nice and dry today in this storm here. Take it from the top and give us your reaction to the big news here today.
Well, Frank, we've had a lot of Trump 2.0 the second time around surprises, and Wall Street doesn't like surprises generally. That's what we saw the last couple of days. Today was a positive surprise, but that most widely anticipated recession of the last year or two that never occurred. It was a no-show. Maybe it's coming, and if it does, the timing would be perfect according to the 4-year presidential election cycle. In year one, the president gets a break. He can clean up all the excesses, and usually we get a decline of some kind. The Atlanta Fed said GDP now that you mentioned, that was negative. In fact, their estimate of gross domestic product turned from a positive to a negative, and then they revised Monday even more negative. The Citigroup Economic Surprise Index turned negative over the past few days, very negative. The Purchasing Manager surveys, that's a negative. These correlations sometimes work, sometimes don't, but they are straws in the wind. And we're getting a slowdown, and it might be just in time to tame recession. Inflation, rather.
Inflation, very good. And we're on there live with Gabriel Wisdom with American Money Management. And certainly there appear to be some flies in the Chardonnay here with the tariffs kicking in and rattling the markets. How do you expect this tariff drama to play out, and how is the market going to continue to react to all this back and forth?
Well, so far the reaction has been negative because, let's face it, tariffs are a tax on goods. Basically, as Warren Buffett said the other day on CBS News, the tooth fairy doesn't pay them. But we need to remember that in 2003, the same Warren Buffett wrote a piece in Fortune magazine where he recommended that there be something he called import certificates, which is just another name for tariffs. He said that the pain of higher prices on goods imported today dims beside the pain we will eventually suffer if we drift along and trade away ever larger portions of our country's net worth. And it would be bad for the dollar. So tariffs, nobody likes them. Clearly, they come at a tough time since for home construction, lumber and gypsum, which are two key components and that includes lime in building homes, come from Canada and Mexico, and that could drive the cost of rebuilding in Los Angeles and building homes in general could drive prices up maybe 10%, according to the National Association of Home Builders.
One ray of sunshine here. The price of oil suddenly back down to around $66 a barrel. Of course, a lot of the inflation was energy-driven in recent years with the price of oil popping, but now coming back down with President Trump's policies kicking in here and drill, baby, drill and all that. There's some good news, right?
That's very good news. And it's important to remember that these oil companies aren't evil. ExxonMobil, for example, might be one of the best natural resources companies that trades on the New York Stock Exchange. They're involved in carbon dioxide removal. They're involved in, of course, exploration and production and refining and all of that. But they're moving forward with a lot of alternative energy projects. Same with Occidental Petroleum. And I also think, Frank, that it's important to take a longer view. The global gas market, according to the research I saw from Goldman Sachs and their oil analysts, is very good. A global gas market likely to grow 50% by 2029, so it's not going away.
Very interesting. What do you see ahead for oil? Obviously, there's still nervous time in the Middle East and a lot of saber rattling still between Iran and Israel. It looks like something's in the works here with Ukraine and Russia possibly, which appears to be putting some downward pressure on oil recently. But What's your calculation of where oil goes from here?
Well, clearly these countries are not friendly, and you would expect the price of oil to go up. I think the industry is going to continue consolidating. We're going to see more mergers and acquisitions in the face of this declining oil demand, with the potential for more transatlantic mergers. I think too that oil companies are going to continue to generate attractive returns to shareholders, even though it may not be reflected in the current share price. So longer term, I'm definitely a holder.
On the air live with Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Certainly it was a welcome sight to see the Dow higher today after this ugly sell-off the last couple of days. And where do you see this market go from here? Any thoughts on whether we're in for more volatility? Are we going to make volatility great again here, or what do you see ahead for this market overall?
Well, it's always been an attention getter. And we're seeing more volatility than we have in some time. I think that one of the bright spots is the initial public offering market. IPOs are extremely strong so far. We had a lull after 2021 in IPOs, but and there's a shortage of publicly traded companies because a lot of companies have been acquired, have gone private, purchased by private equity groups and roll-ups. So this is a good time for new companies to go public. That's a very bullish sign. So while the market may remain choppy for the first half of the year, I think we'll see a resumption of the bull market going forward. This administration is pretty set and smart about markets, so I expect higher.
And of course, something else is expected, and that is a pickup in merger and acquisition activity. What do you see ahead on the M&A front under this administration?
I think it's going to be a friendly mergers and acquisitions environment. We had a somewhat hostile situation the last few years, and the weaker than expected data may drive the Federal Reserve to reduce interest rates, not because the economy is doing well, but because it's weak. Fed cuts because of weak economic data are generally not a good thing for markets, but they're very, very good for mergers and acquisitions because much of it is done with borrowed money.
Speaking of volatility, we have to take a look at the cryptos here. We speak to the biggest fans as well as the harshest critics, and certainly Bitcoin has seen a wild ride this week. Looks like it's back above 90,000 again here, close to 91,000. What are your observations here on what's been happening with Bitcoin and the other cryptos here now?
Well, I think it's interesting, Frank, that over the weekend, I think it was last Sunday, President Trump announced on Truth Social the creation of a strategic crypto reserve, and that gave the cryptos a boost. And now this is supposed to include, this is what the government's going to be buying for the crypto reserve, not just Bitcoin, but also Ether, Solana's SOL token, Cardano's ADA, XRP, which is a big one. The supply of Bitcoin is limited to 21 million Bitcoins, but the others have they've got more elasticity, let's say, and these were all issued with the idea of independence from governments or decentralization. So here we have the largest government in the world aiming to create a strategic crypto reserve. I think it's going to be very interesting.
It looks like President Trump plans to host his first White House Crypto Summit this Friday, so it'll be interesting to see what comes out of that. And I'm impressed that you've expanded your crypto vocabulary this time around. So we have a lot to talk about here with this big summit coming up here on Friday, and of course a very pro and pro-crypto and crypto-friendly administration in place. And at this point, Gabriel Wisdom, let me ask you the big question here. We ask any specific places where you are putting money now and or taking it off the table?
Frank, I love it when the markets go on sale, and there are a great many sectors that are fairly depressed. You mentioned the auto stocks that rose today on the tariff relief, which is basically a month, but we'll see. All the auto manufacturers and the high-tech auto associates, the companies like Qualcomm and other technology companies, have been sort of flatlining while revenue and earnings have been growing. Those look interesting to me. Apple, one of the Mag 7 companies, has revised its iPhone 16 with a budget-friendly iPhone that sells for about half the price of the typical iPhone 16 Pro. I think we're going to see more sales from Apple. I like the quality there. And finally, excluding the Magnificent Seven, the other 493 companies of the Standard & Poor's 500 that haven't done as well, I think these look very, very good. I had mentioned before the exchange-traded fund that where you could get those 493 and exclude the seven inflated but wonderful companies. The symbol is XMAG. I like that.
All right, and speaking of MAG, what about the Magnificent One, NVIDIA, which has seen a wild ride since that earnings report came out, and, of course, seen a rough year after that DeepSeek news came out of China. And I see NVIDIA did rebound today after a rough couple of days here, up $1.31 at 117.30. What about NVIDIA here?
Well, I thought NVIDIA was very smart to team up with Cisco Systems. This is one of the 493 companies, and it's one of the Dow 30 companies that hasn't done much over the past 10 years. NVIDIA wants to broaden their reach beyond the few customers that they have and push AI and the AI chip complex into a wider economy. So they teamed with Cisco, and Cisco has that larger audience. Corporations, government departments, they're all Cisco company users. So I thought that was smart, and I think it'll be very profitable for both companies.
And what did you make of Warren Buffett's letter to shareholders? It was just last weekend that came out, right?
Yes, he is talking about the hereafter quite a bit. Greg Abel is his successor. When you're in your almost mid-90s, I suppose that's forefront of your thinking. But he's still pretty sharp. I enjoyed reading the letter, though. He says a lot of the same things again and again. And that's the key to success. Tell them what you're going to tell them and tell them what you told them. But he does it in his own very folksy manner. So saying that there's no free lunch on tariffs, that there are tax on goods. Basically, the tooth fairy doesn't pay for this. That's Warren Buffett speak.
All right, and he's sitting on a pile of cash at the moment. That's something else to be noted. So we'll see what he ends up doing with it. Maybe after this tariff storm blows over. We will plenty to talk about this year, I'm sure. Gabriel Wisdom, thank you very much for taking the call here this afternoon on all the latest big news here. Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Be careful in the storm, Gabriel, and thank you very much for joining us here live this afternoon.
Thank you, Frank.
And out to the freeways now. Let's check your ride on 790 KBC. Mottek On Money continues here, 790 KBC. Good afternoon. We have a winner. The Dow up nearly 500 today at 43,007. The S&P 500 of 64 at 5,843. And the NASDAQ rebounding 268 points at 18,553. This after a rough start to the month of March, with the Dow giving back about 1,300 points over the previous two trading sessions, up nearly 500 today, up 486 points. The price of gold higher of $1.20 at $2,927 and change. Looks like silver up 12 cents at $32.98 an ounce. The yield in the 10-year note is back up to 4.28%. Looks like mortgage rates have come off a 4-month low. The price of oil, meanwhile, is moving lower. right now up slightly at up 12 cents at 66.43 a barrel. Bitcoin all over the place again today, up right now by about 200 at 90,600 or so. Ethereum up 9 at 2,245, and Doge at the moment at 20 cents. Looks like the auto names did get a boost today on the latest announcement from the White House on tariffs being suspended for a bit, at least a month. Stellantis shares of $1.09 to 12 and change. GM up more than $3 at 48 and change, and Ford at 53 cents at 9.65. Nvidia shares up today up $1.31 at 117.30. Apple down 19 cents at 235 and change. Tesla, after its a rough ride lately, up more than $7 today at 279.10. And now the latest news on 790 KBC. Mottek On Money continues here, 790 KBC. Wide swings for the financial markets lately on the latest tariff news, back and forth. Gold, meanwhile, holding pretty steady above $2,900 an ounce. Silver above $32 an ounce. In fact, just shy of $33 an ounce. Both gold and silver up 37% over the past year. This, as we've seen volatility in the stock market lately, with the Dow coming off the lowest we've seen. Actually, both the S&P 500 and NASDAQ coming off the low seen since November 4th, with the rebound in the markets today, the first update this week and the first update for the month of March. Following all of these economic developments very, very closely, as well as the price of gold and the currencies and everything else, joining us live now, AXEL MERK, the President and Chief Investment Officer at Portfolio Manager at MERK Investments, which includes the VanEck MERK Gold ETF OUNZ, and on X, formerly known as Twitter, at AXEL MERK. AXEL, thank you very much for taking the call here this afternoon.
Good to be with you, Frank.
Wonderful to have you with us. Also author of Sustainable Wealth, by the way, I should add, and that's become a bit of a challenge last couple of weeks. What's your reaction to the latest news here? First of all, on the tariffs kicking in and the market reaction we've seen.
I think I spoke to you last year, and I said the best investment for this year may well be popcorn, and I think today is one of those days. I can't keep up with all these tariffs on and off and on and off. The markets take them seriously, which means we should probably take them seriously. I mean, they have a real impact. And one reason why I'm not a fan of tariffs is because they ask for favoritism. Everybody who screams loud gets an exemption. And that means small business and presumably consumers are the ones losing out in this process. But obviously, I'm not calling the shots. The president is, and he wants to choose something with it, and presumably he just might. All that said, I think way more important than the tariffs are what's been happening in Europe the last several days, if you'd like me to expand.
On the air live with AXEL MERK, and you mentioned this tariffs back and forth and favoritism being raised. Certainly, we saw that it appears with the auto companies today. It was the auto names that rebounded on the suspension of tariffs as they relate to the auto sector. So tell us what else you're seeing there.
Well, the main thing I'm seeing is the much bigger thing, right? We talked about what's happening in the U.S. I don't know whether your viewers are aware that, for example, the German market was up 3.3% today. Month to date, we've only had 3 trading days this month. The euro is up 4%. The Swedish krona is up. The currency of Sweden is up 5.8% in 3 days. And that is in reaction to U.S. policies, not so much the tariffs, but to that White House fiasco, if one can call it such, which finally got Europe to move. The European Union announced what amounts to a spending package of probably 500 billion euros. Germany will have a constitutional change to authorize another 500 billion euros in spending. And the reason Sweden is up so much, at least the currency, is because as a percentage of GDP, Sweden has the highest defense manufacturing, military manufacturing, and so their country presumably is going to benefit from this trend. So there's massive stimulus, massive spending coming in Europe. And then in contrast, in the U.S., remember President Trump said last night, it was only last night, that he's going to balance the budget. Well, if you believe that he's actually going to achieve that, that means fiscal tightening in the U.S. And then China came out and said they're going to grow at 5%. Not sure they're going to do that with these tariffs. But again, that sounds like a massive fiscal stimulus on their end as well.
Thanks for laying it out with so many, the blizzard of headlines and important news coming out hour by hour. I'm just now looking at the euro here versus the dollar. You're absolutely right. I'm sure American tourists will be shocked to see that suddenly the euro is back to $1.08 here. The British pound at 129. Let's see, we're at 20.40 versus the Mexican peso and 143 versus the Canadian dollar there. We're still very strong versus Canada. On the air live with AXEL MERK. So that is all very, very significant. And getting back to the price of gold here, what's your expectation? It seems like the markets are thinking, and certainly gold goes up when there are inflation concerns, and there's concern here now that the tariffs are going to increase inflation. Is this part of the gold equation here?
Well, tariffs are kind of a one-off inflation, assuming they're one-off tariffs. Of course, if they change every day, who knows what's going to happen. But basically, this deglobalization trend we're seeing is all somewhat inflationary because the cost of doing business is going up. It's more difficult. And none of that means that it's not bad to move manufacturing to the U.S., but this process is costly and ultimately inflationary. Especially if the world is somewhat capacity constrained. Also, a few days ago, the stock market was down, the dollar was down, bond yields were down, and I heard somebody say, "Oh my God, that's going to get Trump's attention." I said, "Yes, but he actually likes two of the three. He likes the stock market going up, but in Trump's world, a weaker dollar makes the U.S. more competitive, and the lower bond yields are necessary to finance the deficit. And so we don't have." There's talk about fiscal discipline. Let's see how much of that's going to happen. I'm a bit of a skeptic because the big entitlement issues are not being addressed. And of course, it's great to get rid of waste. I just wonder how much of a meaningful cut that's going to be in the long-term deficit. And
right.
To answer your question, that's good for the price of gold, right?
And speaking of gold, is there going to be gold at Fort Knox when they open the door there?
There will be. There are lots of nuances in the gold market, and one thing that people may not be aware of, Fort Knox is not part of the global clearing system. The gold literally just sits there. Once in a while, some gold goes in, some of it goes out, but it is not used as part of transactions, so to speak, on a daily basis. That's really the core of what the London market is for. Now, as you've recorded, right, there's been some flight of gold from London to New York. It's not as easy because they don't take the same gold. It has to be refined in Switzerland before it's shipped to the U.S. So these markets are real markets. And just as we had a disconnect with negative oil prices a few years ago, there have been some distortions in the gold market. And it's fascinating to watch. There's a lot of reporting where I'm scratching my head about it. Ultimately, the market is working, that gold in different places might just cost slightly different amounts because of the difficulty of procuring it. But the gold at Fort Knox, by all means, let's audit it. But the downside of auditing it is that it gets more attention, and by getting more attention, the folks in Congress might want to get their hands on it. That's the only downside of it. But otherwise, I'm all for the audit.
Very interesting. Any thoughts on where the price of gold goes from here? I'm looking at it here now. It's just above 2,900, 2,927 and change here, up 37% over the past year.
Well, the one thing I'd like to point out that I know you cover Bitcoin and cryptocurrencies at times. There has been an increasing interest of the crypto folks in gold. And while there's, of course, a certain amount of rivalry between the two camps, in my view of the world, a lot of the digital asset investors are speculative investors. They have been absent from gold, and if they have a greater interest in gold, that could give gold another boost. Now, that would mostly give it more volatility, though, because as you've well seen on the crypto side, the volatility is rather dramatic. And if some of those guys will start investing or playing with gold, I'm not sure whether I call it investing, what they might do, then the volatility in the price of gold might go up from here forward.
Axel, thank you very much for joining us live here. As always, Axel MERK, the President and Chief Investment Officer, also Portfolio Manager at MERK Investments, which includes the VanEck MERK Gold ETF, OUNZ, author of Sustainable Wealth, and on X, formerly known as Twitter, at Axel MERK. Thank you very much, Axel, for joining us live here this afternoon.
My pleasure.
Out to the freeways now, 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. The latest winter storm and downpour and cold weather here in Southern California, sadly adding to the misery of the homeless on the streets of Los Angeles. More rain in the forecast for next week. The Union Rescue Mission is a beacon of hope on Skid Row, with the number of homeless men, women, children, and seniors at or near record highs here in Los Angeles. And now, after the devastating firestorms in Los Angeles in January, it appears the situation is only getting worse, with thousands of homes and businesses destroyed and the economic impact of this still being calculated. And joining us live now is Mark Hood, the CEO of the Union Rescue Mission, also host of the Just Help One radio show and podcast, heard Thursday nights at 6 p.m. here on 790 KABC. And it's an honor to co-host that with you, Mark Hood. Thank you very much for taking the call here this afternoon.
Frank, it's always good to talk with you and always good to be on your show, so thank you for having me.
You're right there on Skid Row. What is the situation there today, given this winter storm that's coming through?
Well, it's wet and cold, and so our doors are as always, they're open. We've actually had our chaplains and people out walking the sidewalks today and inviting people in. We have our day rooms open. So as always, we don't say no to anyone, and you're welcoming people inside. Sadly, there are those that are still out there in the elements, but we are certainly making it known that we're a refuge if they want to walk through that door.
On there live with Mark Hood, the CEO of the Union Rescue Mission, which, by the way, includes the main facility in downtown Los Angeles on Skid Row. And people should know that Skid Row is not just one street. It's about 60 blocks there in the downtown Los Angeles area. And also it includes the important facility called Hope Gardens in the San Fernando Valley, which is the place where women and children as well as seniors are being cared for there. And also the Angeles House facility in South Los Angeles. Mark, you've taken on a tremendous responsibility with the Union Rescue Mission, and you were actually out there part of the most recent homeless count. Give us your assessment of things here at the moment.
Well, obviously there's still a crisis out there and a lot of work to do. But what is hopeful to me is that, number one, I think the city and the mayor's office is recognizing that they need partnerships in the city to help with the crisis, and that we need a solution-based approach and not just a moving people off the sidewalk approach. And I think more people are coming to that awareness. And it was, a really exciting day at the mission today. It was really good for me and my team. Maria Salinas, who is the head of the Chamber of Commerce for LA, was with us today and talking about ways that we can have potential partnerships with the Chamber of Commerce to also address the homeless situation, because ultimately to really truly end homelessness, we need to employ people, and she is so gracious to have those conversations. And then we also we're lucky enough to have the new Secretary of Housing and Urban Development, Secretary Scott Turner, with us today, who was a very exciting visit. He looking to partner with Christian organizations that, again, have a solution-based approach towards helping and healing people. And he actually spent time today walking around our facility, talking to our guests and talking to graduates of our program and encouraging them. So although there is a crisis out there and there's a lot of work left to do, what is encouraging is there are people that see that there are solutions out there, and we just need to build bigger and better partnerships so that we can cast our nets further and farther and continue helping a greater community.
That is wonderful news. The fact that the new HUD Secretary there from Washington, Scott Turner, visiting Skid Row here in Los Angeles, and That is absolutely, thank you for mentioning that big news here. And of course, Maria Salinas, the president and CEO of the LA Area Chamber of Commerce here, a giant on the business scene, giving the homeless issue attention and Union Rescue Mission attention. That is all very, very positive. And it certainly should be noted at this time what URM is doing is working. And indeed, Union Rescue Mission, I know, has the highest possible rating from Charity Navigator. So getting a lot of attention for a lot of good reasons and under your leadership, Mark Hood. So that is really very, very big news that you're sharing with us here. And I'm sure we'll have a chance to talk more about it in upcoming Just Help One radio shows and podcasts that'll be coming up. The Just Help One campaign is underway for anyone that does want to join this initiative. What's the best way to do that?
Well, you can go to justhelpone.org, and you can go there. You can donate, funds. You can donate goods, but you can also donate time. There's a volunteer page there as well, to where you can sign up to volunteer and come down and help us be the hands and feet in the mission we do. And I'd like to share, and we will talk about this more tomorrow, Frank, but I just will never get tired of sharing that I'm so proud to be a part of a mission that is so much more than a shelter. We certainly are that. I mean, in this inclement weather, we want to be there to get people out of the elements and into a safe, warm, and dry environment. But so proud to be a part of a solution-based organization that realizes that, you have to address the heart problem, you have to address the mind problem, you have to address the employment problem, and to see success stories every day of people helped, healed, and back into society on their own 2 feet. Partnering with this organization, I'm going to tell you, I started out as a volunteer, and now then I'm here full time. I promise you it'll be a blessing in your life. If you're looking for a place to plug in, we're a great place to start.
That's wonderful. Mark Hood, the CEO of the Union Rescue Mission. Mark, thank you very much for coming to the line. Our guest tomorrow evening, by the way, on the Just Help One radio show and podcast tomorrow evening at 6 will be Honorable Jackie Lacey, the former Los Angeles County District Attorney, who's been a supporter of URM for years and currently serves on the URM Board of Directors. She also started as a volunteer, and we'll be hearing from the case manager at the wonderful Hope Gardens Family Center. And I look forward to being with you on the air tomorrow evening at 6 right here on 790 KABC.
Thank you, Frank, and have a good evening, sir.
Thank you very much, and we'll continue in just a moment here. Coming up next, it's the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 on this program tomorrow afternoon here at Mottek On Money, 790 KBC.
Expert entrepreneur Ed Milet is on a mission to max out your life.
So many of you have dreams in your life and you don't go touch them. You've got to begin to touch your dreams.
It's time to get laser focused on peak performance.
I'm going to give you very unique habits that I do on a daily basis. Say no more. Have deadlines in your life. Go to work.
And become the best version of you.
Take a day and serve that mission.
The Ed Milet Show.
Max out.
Follow and listen on your favorite platform.